The big change. PNB Housing Finance has completely fixed its business. They stopped lending money to big companies, which was risky, and switched to lending almost exclusively to regular people buying homes. This plan worked, and now 99.7% of their loans are to individuals. The good news, why it looks strong. In November 2025, the company earned a AAA credit rating. This is the highest safety score a lender can get. What this means, they can now borrow money very cheaply. The plan. They will use this cheap money to offer loans to more people, especially in their Roshni division, loans for affordable homes, which makes them the most profit. The risk, what to worry about. It is tough out there for prime loans, loans to people with steady salaried jobs. Big banks are offering these people very low interest rates, 8.4% to 8.6%. PNB Housing has to fight hard to keep these customers without losing too much of their own profit. The opportunity. Why buy the stock? You are looking at a very safe company that is growing fast, 17% per year. But the stock price is still quite reasonable, cheap compared to the actual value of the company. The future. As their Roshni business gets bigger, their profit margins are expected to jump from 12% today to 14 to 15% by 2027. How the company is doing. December 2025 update. The latest results show that the company's new strategy is working perfectly. Total profit. They made 521 crore rupees in profit. That is 11% more than last year. Core earnings. Money earned purely from interest is 757 crore rupees, up 13% from last year. Total loans given. The total value of all loans they have given out is roughly 83,879 crore rupees. Growth. Loans to everyday people, retail, grew by 16%. Cleaning up risks. They have successfully stopped lending to big companies, corporate loans, which was a risky area. That cleanup is now 100% complete. Safety. The loans are very safe. Only 1.04% of borrowers are late on payments, bad loans, which is even lower than last year. Profit margin. For every loan they give, they keep a steady 3.67% as profit. This is stable because their affordable housing loans earn them good interest. Key game changers, why they will win? The AAA superpower. Because they now have the highest safety rating, AAA, they can borrow money much cheaper than before. This savings goes straight into their pocket, meaning higher profits over the next year. The Roshni engine, their affordable housing division, Roshni, is growing incredibly fast, over 30% a year. It earns them much more interest, about 12%, compared to regular home loans, about 9%, making it their new cash cow. Going where banks aren't. They have opened over 350 branches, focusing mostly on smaller towns and cities. Big banks don't focus as much there, so there is less competition and more money to be made. The red flags, risks to watch. Too much in one place. About 40% of their business comes from just one area, North India, NCR. If the housing market in that specific region slows down, it hurts them much more than it would hurt companies that have business spread out all over India. Losing customers to banks. Big banks are constantly trying to steal their best customers, prime borrowers, by offering lower interest rates. Currently, about 12% of their customers leave them to switch to these cheaper bank loans. Ownership uncertainty. Punjab National Bank, PNB, still owns about 28% of the company. There is a small long-term worry that if PNB ever needs money for itself, it might suddenly sell these shares, which could hurt the stock price. Comparing with competitors versus Bajaj Housing Finance. Bajaj is the popular favorite right now because it is growing fast and is high quality. However, its stock price is extremely expensive. PNB Housing is growing a bit slower, but its stock is much cheaper, costing about 1/3 the price of Bajaj. Versus Canfin Homes. Canfin is the best at keeping their daily running costs low. However, PNB Housing has an advantage. Their affordable housing loans have more room to grow and make higher profits in the future compared to Canfin, which mostly sticks to standard low-risk loans. Versus LIC Housing. LIC's stock is cheaper to buy than PNB Housing's. However, LIC is riskier because they often have issues with bad loans, people not paying back. PNB Housing's list of borrowers is now much cleaner and safer than LIC's. Company snapshot. As of January 22, 2026, the big change. The company has successfully reinvented itself. It used to be known for risky loans to big companies, but now it is a safer, customer-focused business. Current price. The stock is trading steadily between 930 rupees and 945 rupees, currently around 935 rupees. What is happening? Even though profits are up and they got the top AAA safety rating, the stock price hasn't jumped huge yet. This is just because the general market is a bit tired, not because of the company. Inside, the business is stronger than ever. Is it expensive? No, it is a bargain. The stock is trading at a very cheap price compared to popular competitors like Bajaj Housing Finance, which costs nearly 3 times as much for every rupee of profit. Company size. The total value of the company is roughly 24,300 crore rupees. The immediate future, FY 2027, short term, the waiting game. The stock price might stay boring for a while, stuck between 900 rupees and 1,000 rupees. Investors are waiting to see proof that the new AAA safety rating actually helps the company save money and increase profits. Long term, the big jump. Once the profits ROE hit 15%, the stock price is expected to jump. It should trade at 1.8 to 2.0 times the company's book value, which is much higher than today. Why this year matters. FY 2027 is special because it is the first full year with 0 bad corporate loans dragging them down, plus the full benefit of cheap borrowing costs. FY 2028, the speed-up year. What happens? The new branches opened in small towns, Tier 2 third cities, during 2025-26 will stop costing money and start making money. Roshni division. By now, the affordable housing loans will likely be a massive chunk of their business, targeting 15,000 rupees plus crore. Result. Profit margins will expand further because these small town loans pay higher interest rates than city loans. FY 2029, the cash cow year. Dividends. With high profits and no old bad loans to clean up, the company might start paying out much bigger dividends to shareholders. Stability. PNB Housing will likely be seen as a boring but profitable company, the kind that safe investors love. Valuation. The stock will no longer be considered a turnaround story, but a blue-chip leader in the housing market. FY 2030, the big league goal. The target. The company aims to double its size compared to 2025. The total loan book, AUM, could cross 1.5 lakh rupees crore. Dominance. They aim to be the #1 lender for affordable homes in India, beating out smaller competitors. Shareholder value. If they stick to the plan, the stock price could potentially double from 2026 levels as they compound their profits year after year. Final verdict. Should you buy? Recommendation. BUY. For bargain hunters, value investors, strong buy. It is extremely rare to find a company with the highest safety rating, AAA, selling at such a cheap price. Because the stock is already undervalued, the risk of losing money is very low. For growth seekers, buy for stability. The company is growing well, 17% per year, but it is not a get-rich-quick rocket. Buy this if you prefer steady, reliable growth over risky, volatile stocks. For short-term traders, watch the price. Watch the 980 rupees price level. If the stock crosses above this, it confirms a new upward trend. Until then, the best time to buy is when the price dips near 900 rupees. The bottom line, investment thesis. The hard work of fixing the company is finished. The growth phase has officially begun. You are buying a clean, safe, and customer-focused company at a discount price. If this video helped you, please hit the like button, share it with your friends, and subscribe to the channel for more updates. What should I cover next? Write the name of the stock you want me to review in the comments below. Thank you for watching.